Hello everyone, welcome back to the Monopolistic Investor, and in this episode we'll take a look at what is happening with my portfolio, why I'm in the green finally, and some of the great companies in the world that reported earnings. For example, we had Microsoft report their earnings and beat them by 7.38%. We had Visa, who bet by about 3%. We also had McDonald's, Coca-Cola, Mondelez, Caterpillar, and Booking. As I'm the owner of many of these companies, I'll be looking over at some of the companies that I own. So starting off, we have Microsoft, and I can just say that their Microsoft Cloud is up 22% in constant currency. Constant currency means they're including all the foreign exchange effects, negative and positive, they are up 22%. And that is positive because, as we can see, Amazon is leading the market share in terms of private cloud offering. So what we have here is that they are focusing on cloud and AI. Look, they are highlighting the fact that they are investing into infrastructure. They opened data centers in 10 countries across 4 continents. And so they are applying their cash to good use. You can see that nearly 60% of the Fortune 500 companies are using PostgreSQL, that is data and analytics, and that is deeply integrated with their AI platform, so that is a positive thing. They are also highlighting the use of the agents, and they are now making this Foundry app, and they are highlighting the fact that many companies like Epic, HR Block, and LG Electronics are using this to power their AI apps and agents. But what Microsoft has that is a unique thing is their Visual Studio and VS Code offering. As you know, I'm a programmer, so I'm programming naturally in these 2 applications. And you can see that 50 million active monthly users. And so they have connected VS Code and Visual Studio Code with their Copilot called GitHub Copilot, and it's used for helping developers program. And so it can now recognize errors and fix them automatically. Any programmers know that this is really useful. And so they have over 15 million GitHub Copilot users, which is up 4 times year over year. 4 times, such a big company, and they have 4 times as many users just over the week, just over the year, sorry. And so they are offering factory operations and safety agents, and so that enables companies like Autodesk, PNC, and Siemens to make their own industrial AI solutions on their software. That is positive. Specific AI applications are what will win in the long term. So we can see Windows 11 commercial deployments increased. Well, all I can say is that I don't like Windows 11. It's too demanding for the computer. We can see that LinkedIn, the Facebook for business owners, has over 1 billion professionals. So I guess they were trying to make people spend more time on the platform, and so that was up 36% all of the time watching the videos, and comments 32% up. And so they saw also more members use AI. Well, guess what? That is premium, so they are also learning from that. So you can see that 75% subscriber growth for that. They're integrating AI in their Xbox offering. As you know, Microsoft is the owner of the Minecraft, so they have seen a 75% increase in weekly active users of Minecraft after this movie. And so, why I'm talking about this? Well, because they also have game assistants and expert coaching for people using AI on their Xbox. So, it is really helping the people who want to do it. And so 15% in constant currency is their revenue, mostly because of their focus on execution. Well, that is positive in my opinion. The intelligent cloud. You can see that 22% in constant currency, that's what I said, and that was ahead of expectations driven by Azure. And many people are focused mostly on that, but let's not forget that Microsoft is not only the cloud. They also have the Windows operating system, they have their Surface laptops, they have the Microsoft 365 product offering, which is here. So now they are trying to make people use their Copilot in their Office as well. So that is positive. I like that. They expect the cost of goods sold to be around 20% growth in constant currency. So that is what they are forecasting for the future. And so their other income and expenses expected to be negative 1.2 billion because of their investments accounted for under the equity method. I don't understand that a lot. Effective tax rate to be approximately 19%. All right. So that is that. They bet on their earnings, and as a result, here we have them. Over the past week, it looks like this. I think here we had the earnings fall, and people were looking at what is happening with the company, and then after that a shoot up, Well, all I can say is that Microsoft isn't the best bet at all right now. If we go to... Okay, so we have Microsoft right here, and as you know, we all like Microsoft. I think we can agree on that. Compared to their peers, they have pretty good financials. They have a big market share, 64%. But the thing is valuation. Microsoft is just expensive. Even though some of its businesses are growing at big rates, it's just not the best option right now to buy it. It would need to grow 9% for it to be worth $362. Well, Benjamin Graham says it might be worth somewhere between 400 and 253. So for me, it's now overvalued, and I'm not investing in them. But of course, I had to buy them at some moment. Well, not this year. I think I bought them in 2023. But I made a mistake. I shouldn't have bought them then. Because, well, it was just a huge mistake for me. I won't make it again. All I can say is that don't buy Microsoft right now. Of course, this isn't a buying recommendation. Do your own research. But from what I've seen, I think Microsoft is a good bet for the long term. Of course, like someone like me is on the long term, so I'm not worried about Microsoft at all. Next up, we had Visa. And Visa is an interesting one because many people are looking for Visa as some sort of identification of consumer spending, because they look at their earnings presentation and they say, oh, Anthony, look, consumer spending went up 8%. I guess that's good. Well, consumers don't only buy things because they want to, they also buy things because they need to, like food, like shampoo, like anything else, you know, subscriptions, Netflix, Duolingo, anything like that. And so Visa announced on Wednesday that it's partnering with a group of leading AI chatbot developers. So you have Microsoft, OpenAI, Anthropic, Perplexity, and of course in France Mistral. And so what they want to do is make a intelligent agent which will use your previous purchases to buy things for you. And they are saying here that it's not something that is, you know, going to completely destroy shopping experiences for people. No. What they are saying is that it will only be for, well, it will make life easier for people like who are using something like a list of things to buy, or for example something mundane like groceries. So you know, it's a good thing that they are expanding into that, and so I'm happy to see that. Visa earnings report, I will just show it right here. They bought a company some time ago. I don't actually remember the name of it because I have many things on my head, but all I can say is that on a general accepted accounting principles, their net revenue year over year increased 9%. 9%, that isn't adjusted for constant dollar basis, which would be 11, but you know, for me it's a really positive thing. 9% revenue growth for such a big company. Is correct. We can see that their payments volume grew 8%. So all of those earnings, sorry, not earnings, but payments between businesses and consumers. Well, that is, well, normal, you know. It's nothing special. People always pay with their cards, you know, and Visa happens to be the biggest of them all. Here we can see that for their total spending, we can see that it was high in January, probably due to the New Year's celebrations. Then in March, acceleration, and April even more. That is something what we like. I don't know why here lower, maybe people were lazy. Here you can see it on a visual basis. So total growth in constant currency. I guess we should look at this thing. You can see that it went down a little bit, but that's nothing to be worried about. Looking at the international, you can see that on a constant currency basis it's up 12%. in the previous quarter, and now it's 10%. I'm looking mostly at debit, but maybe we should look at the total instead. 5%, 6%, low single digits, not bad, I must tell you. Basically it's it, it's a really boring presentation if you want to ask me. But what they have been selling, using their revenue for expenses, you can see that 13% of that is for marketing. You can sometimes see celebrities. We can see also that they are very committed to buying back shares and doing dividends for long-term shareholders. I like that a lot. And you can see low double-digit and high single-digit for their operating expense. I guess for that AI infrastructure they need to build, maybe mainly program, but you know what I mean. Full year, high single digit, I think it might be in the high single digit growth. But I'm really not worried about this company at all. They are producing massive amounts of cash flow, so I'm not worried. I will just pop it up here so you will believe me, because maybe some people don't. Their revenue is like a straight line, really positive. But it's angled, so it's not flat like Apple. Don't worry. We wouldn't want that. But we can see their gross margin is 97% for some time now, so that is positive. And they can do hikes to dividends. A bit decelerating, but still 13% is not bad. Free cash flow is like really strong, They are generating around the same amount, but I mean that is just, temporary look. They still have much room to grow, you can see that their profit margin is just 52% and they have room to 66%, so still some room for expansion. And remember that they have effective duopoly with MasterCard, so I'm not worried about them at all. And so that was Visa. And what I think of Visa, I think that it's a really good company. And also here is what their CEO has to say. Visa's strong 9% fiscal second quarter net revenue growth was driven by healthy trends in payments volume, so natural, cross-border volume and process transactions. Consumer spending remained resilient even with macroeconomic uncertainty. Our strategy across consumer payments, commercial and money movement solutions and value-added services, our diversified business model, and our focus on innovation position us well for the rest of the fiscal year and beyond. Pretty, positive summary here. Of course, CEOs always want to make their numbers look better than they already are. But from what I've seen here, there is nothing to be worried about. Visa's as strong as ever, boring business, which many people forget about, and are surprised when they suddenly do something. What I think of their valuation, let me just pop over to my website, Market Vision, and I want to look at the discounted cash flow valuation for Visa, because I'm actually doing another program to be added to this, so I will be able to see the previous amounts of their financial efficiency metrics right in one place, So let's see. Yes, financial health positive, efficiency really great, but that's not what I'm looking for. I'm looking for Visa valuation. So we can see that the revenue growth, past at least, is 10% around. So I guess we could target that amount, and we come to this conclusion. What is their current price? Around that. So we can tell it's around fair value, and we aren't going to really make it even higher. Benjamin Graham says the same. Basically, it's around fair value or maybe a bit higher. I'm not worried about Visa, but I'm not buying them right now as I see better opportunities in other companies. That's not to say that it's a great company, I really like it. They just have some negative cash, but that is due to their acquisition, so I'm not worried about it at all. Next up, we had Booking report their earnings, surprised by 43%. Actually, I'm not going to look into them today, but all I can say is that I'm happy to be an owner of this company, as they are really targeting people on their services. It's up 8% for the past week. Okay, so let's now go with Mondelez. It's a company which is making chocolates and sweets and all sorts of those things. So an ideal company to invest if you like Charlie and the Chocolate Factory. And so I'm just going to pop up their earnings reports right here. We can see that their net revenues increased by 0.2%. Organic net revenues 3.1%. That I think that is a non-GAAP metric, so I'm curious to say. And Mr. Dirk van de Put, their CEO, said that they delivered solid Q1 results in line with their expectations, driven by their strong execution of their growth strategy. What is their growth strategy? Well, partnering up with Microsoft for their Minecraft movie. Well, that was a good idea. I actually bought some Oreos some time ago because of my school trip. So I'm happy for that. What we have here is we can see that their North America actually declined their net revenue. So of course that isn't something we like. Their Latin America also declined, but for some reason the emerging markets, well, as you can see, they have positive. So I really like that, as I live in Europe, in Poland. And we can see that their net revenues increased around 0.2%. Recently they acquired Evert, and so because of that and their higher prices, they achieved this small amount of organic net revenue growth. Gross profit decreased. Why? Well, because of commodity prices, coca, I guess. Operating income decreased. Operating income margin was 7.3%. Not the best, but I mean, they will exist. They are returning capital back to shareholders in dividends and buybacks, and it's affirming its organic net revenue growth to be around 5% and adjusted EPS to decline about 10% on a constant currency basis due to coca cost inflation. Yes, that is a thing that investors should look at. Coca prices impact Mondelez in a meaningful way. We can look at their presentation that they did a few days ago. And yeah, as you can see that their chocolate strategy is on track with strong pricing execution. So yes, those prices may be going up, but people are still buying. Look at me buying Oreo. I bought it. Why? Well, I bought it because of the Minecraft movie. I finally wanted to taste it. Even though I'm an investor in them, I do like this new Oreo design. And their biscuits performance was softer due to a decrease in US consumer confidence from economic uncertainty. Do I think it's really that important? Well, I don't think so. That is correct in all ways. I think it's also because of some random reasons, but I guess, people, well, will still want to buy cookies. I mean, who doesn't like that, well, chocolate chip cookie in the evening, who doesn't like it? Of course, they are reaffirming their 2025 outlook. Oh yes, we can see that those numbers are negative, but don't be worried about that. In North America, biscuits, a bit softer growth, but better than most other snacking categories. US biscuits year-to-date share gains supported by brand equity despite US confidence decline. In Europe, resilient category value growth in both biscuits and chocolate, excluding Easter phasing. Well, because you know what is happening in Europe in Easter, this Easter bunny mania, invented by Germans, I think. Emerging markets, well, what? Europe isn't an emerging market? Okay, doesn't matter. But we can see that confidence in consumers is soft in Brazil, Mexico, and China due to economic anxiety, but India stable. Yes, so many people like chocolate. But in India, chocolate, China biscuits, and Brazil chocolate are gaining, so that is positive. What they are doing is they are reinvesting into their brands, so Post Malone, Oreo, and Cadbury Biscoff. Also, I think I also saw their pretzel Oreo or something like that. Maybe I am wrong. But there are, 100,000 stores added in emerging markets in Q1. That is really good. Expanding their distribution. That is positive. What are they targeting? Well, they are targeting many different size options for their chocolates and other things, as that, allows for more pricing power in terms of that, because smaller things tend to be more expensive in terms of food, and so that means that they might be able to earn more money. And of course, they launch new innovations like the Lotus partnerships and seasonal activations. Really like it. Easter bunny. Well, I haven't eaten it, but I see that it's a popular thing. Oh, 7 days. That is something which you can buy in my school's vending machines, so that is positive. Many people like eating those 7 days. And Belvita, oh yes, the breakfast cookies, that accounted for their 3.1% revenue growth and 3.9% emerging markets growth. Their category growth, well, mostly gum and candy, I guess. People like those small sweets better than chocolate, but we'll see. I think biscuits are also a durable good that people like to buy for times of hardship, but we'll see. Some multiple one-timers, really nothing to be worried about. You can see that here we have their adjusted gross profits for the foreign exchange, pricing of net commodity costs, so coca, all of that. Yes, we can see that earnings per share lower because of coca costs being higher. Well, of course, something like that needs to happen at some point. But they bought back $1.5 billion worth of shares at around $57. I like that, but I wish I bought at another date myself. You can remember this metric I showed you at some point. They are expecting cocoa prices to go down. Well, I don't know about you. I like cocoa. Well, I mean chocolate, so I guess that this will go down at some point. So they expect earnings per share growth. That is a positive end to the presentation. And I guess that everything is fine for this company. Some headwinds, of course, due to consumers saying that, oh no, I don't like that. Really, I think that Mondelez will prevail in this environment. Now, the next company which reported their earnings was, let me just see, where do I have all of that? Well, we also had Schindler report their earnings and they were up after that. However, that isn't an indicator of their whether it was positive or negative. But we also had Caterpillar. Total sales decreased, probably due to the fact that smaller amounts of people are actively buying this. But we can see that because of their lowest average financing rates in North America, you must remember that they have products which are very expensive, and they have some scenarios for 2025 because of the tariff situation. They are expecting current tariff levels, so slightly compared to 2024 full year sales, but in line with previous expectations. Their profit margin, operating adjusted, is to be within their annual target range, and free cash flow to be within the annual target range, so that is positive. So they expect their sales to be similar to last year, so not some, but they expect a headwind of 250 million to 350 million in Q2 from tariffs. They have a strong balance sheet. Really? Well, let me see. They're on the New York Stock Exchange. We can go on to Caterpillar right here. Load it. Do I consider this to be a great financial health? Well, it's not the best, but at least they have a positive net equity position, but still net cash is negative. But compared to other companies in the similar industry, for example, John Deere, well, it's just incomparable. Agco still lower. Other companies aren't doing as good as them. They have a big market share, and according to my calculations, they are worth more than they are today. Do I think that it's a buy at these levels? Well, I really don't know. But from what I'm seeing, they might be. It's a really great company. Every time I see a Caterpillar, Digger, I'm happy, you know. I guess that because of their order backlog going up, you know, it increases, you know, many people recognize this brand. I guess there's nothing to be worried about, you know, business as usual. So those were the companies that I went over, and all I can say is that I got a cash dividend from Altria, and that means I will be able to reinvest that cash into other things, such as Adobe or ASML, and right now I'm considering opening more positions in ASML or maybe into Caterpillar. I don't know, but you know, I'm interested in ASML, Uber, Adobe, and Google, you know, right now. I'm looking at the companies which have negative positions here. You can see Adobe is like really below what it's meant to be. You know, for me, you know, when I look at Adobe, let me just Nasdaq, Adobe. Let me just load this. I'm bullish on Adobe, you know. Last week they mentioned the fact that, you know, strong balance sheet look. They mentioned the fact that they are turning a new Firefly app, you know, on, you know. We also have Autodesk, similar company, but still. Adobe has a lion's share in the software industry, you know, 21% is something really good, incredible. And based on their previous, you know, investor earnings, look, 10% trailing 12 months growth. If we look at that and we just give them 10%, it's valued at this amount. So basically 3x. Benjamin Graham is saying $765. I do think that Adobe might be a good bet for right now. I'm really not sure which to buy right now, but I think that I will buy either Adobe, ASML, Caterpillar, or Duolingo. I will let my paid subscribers know first, and then I will let you know. Remember to join my Substack below in the description and pinned comment. But you know, anyways, that is all for this video. Thank you guys for watching this, and see you in other videos. Goodbye and have fun in investing. This isn't financial advice, of course.